to you when you know that it doesn't. Good morning, everybody. Happy Monday. It's March 24th, 2025. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. Great to be with all of you once again after a nice weekend. March Madness got underway this weekend, and it was a crazy weekend of college basketball. We have our Sweet 16 set. They'll be playing on Thursday and Friday of this week, and then the Elite Eight Saturday and Sunday. And then we'll have our Final Four in a couple of weeks. But first off, we have to do some things with the Daily Bites here and talk a little bit about markets. So what do you have looking forward to today? So it looks like we have a nice bid in the market today, right? S&P futures are up 68 handles right now. It's a little bit better than 1.25%. Nasdaq up 307 points. Dow Industrials up about 400, just pushing up to that near 43,000 level. And we see the Russell 2000 is pushing higher as well too. That's 207 right now. It did fall back a little bit on Thursday and Friday, to under 205, but it's right back up above 206 right now. So somewhat in a no man's land with that index. But I think if we get a move up towards 210, maybe above their 210, this small caps, the IWM will have some room to run. Let's take a look at that chart in a little while. But as it is, let's take a look at the big board over here. We have the Nasdaq, again, the QQQ up about 4 points above 423 and change. We have the Meta 612 up $15. We added some of that last week. We have some good strength in Tesla, also Netflix. Apple's up a little bit. We see Amazon making a return trip above $200 a share right now too. So some good strength in some of the big names that we follow that have been pretty prominent over the past couple of years in the markets that have shown some weakness. But we'll have to see how things go today. And why is that? It's because let's take a look at we always have to keep one hand on the wall here, because we take a look at TLT here. What do we see here? TLT is down. And what does that mean? That means interest rates on the long end of the curve are what? Going higher, right? So when TLT is weak, that means bond prices are coming down and yields are going up. So is that any sort of worry or emergency right now? No, not really, because the S&P equity futures are dominating the action right now. But it's something that we have to keep in mind, right? Especially if yields stay up. It is like kryptonite or poisonous for the small caps, right? When yields are rising, we've seen the small caps badly underperform the rest of the market. So let's take a look at the returns for 2025 in March and also year to date. Take a look at this here right now. S&P 500 is currently down about 3.7% on the year. It's down 5% for the month of March. Now, don't forget, we have 6 trading days left, including today, for the whole month of March, and that's it. Next Monday is the last trading day for March. We have all 5 days this week, and then that last day next Monday. We have the Nasdaq is down about 5.5% for the month, and if we open up here, that loss will be cut by about a third to about 3.5%. But quarter to date, down 6%. And that's year to date. And again, don't forget the end of the quarter will be coming up next Monday as well too. Russell 2000, worst of them all, down 7.8% on the year. And again, this is reflective of the worry about the economy, A, B, worry about inflation, and C, worry about that we've seen bond yields starting to rise and up in the 4 to 4.25% range. And if that stays there, or if we start seeing a bigger rise or a sharper move up in yield, that's going to have a negative effect on small caps. But we have to see how things play out first, right? We can't make assumptions about where things are going to go. We have to play the markets as we do, one day at a time, not get hasty about things and start making predictions about where things are going to go. Now, speaking about predictions here, we've heard a lot of things being bantied about regarding April 2nd, right? And this is the day that apparently the tariffs are going to kick in for the United States against a lot of other countries, and maybe some other countries are going to be reciprocating as well too. So there's a lot of worry, a lot of talk about this going on. We really don't know how these are going to affect us. Or to the extent of the negativity that it's going to affect us, or is it going to be positive? We really don't know. But the market hates uncertainty here. So once that certainty is laid out or is done, once those tariffs are in place, if they do get in place, then we'll have a little bit more certainty, and I think volatility is going to start coming down. Does that necessarily mean the markets are going to go up? No, of course not, because the VIX is sitting at around just under 19% now, almost just under 20% right now. Still, there's some worry and concern there that the markets are going to wobble when that news comes out. But as we saw last week after the Fed meeting, Fed decision, which came out and said that we're going to stay with the interest rates where they are, perhaps pointing towards rate cuts later in the year, maybe one rate cut, possibly two, but more likely one rate cut by the end of the year. The market is still pricing in 3 to 3.5 rate cuts. So there's a little bit of a discrepancy there, a little bit differential there between where the Fed is at and where the market is at. So that's going to eventually get reconciled and come together. And if the Fed is right, then it's going to be some disappointment on the side of the markets, right? Because if the market is expecting 3 and they have to cut it back to say 1, we know what happened last year when the markets were expecting, say, 6 or 7 rate cuts, and the Fed said, hold on, hold your horses, slow down a little bit, cowboy. We need to draw it back a little bit. And the markets did take it on the chin after that happened. So, but don't forget, we did end up finishing with a strong year in 2024. So that being said, let's take a look at what we have on tap for this week. So we have some economic data that's pretty important. We have services and manufacturing PMI coming out this morning at about 9:45, about an hour from now. We have consumer confidence coming out tomorrow. Later in the week, big numbers coming from the GDP second revision. We also see the trade balance. People are paying much more attention to what's happening with trade, especially with these tariffs coming in and with the higher interest rates being persistent in the economy. And then Friday, big number Friday, is personal income and spending, PCE index, core PCE index. These are all for February numbers. So these are going to be very important readings. This is one of the Fed's favorite gauges for inflation. So that'll be, and we have consumer sentiment coming in on Friday as well too. So we have some important data coming in as far as earnings coming out this week. I see the biggest name that we have on the board for earnings releases this week is Lululemon. We also have Chewy. We have GameStop. A lot of people still playing around with that name as well too. Let's see, what else do we have here? We have Petco coming out, KB Homes, Winnebago, some other smaller names coming out as well too. So the next big earnings season will be starting in about 2 weeks, and we'll see some of the banks releasing their earnings towards the end of that second week of April. And it'll be some important news coming out again with that April 2nd with the tariffs, and we'll see how the market responds to that. We also have, don't forget, April 15th or 16th, something like that. Taxes are due, and at least your tax returns are due, and if you owe any money, you're going to be paying that. So we do often see a little bit of weakness leading up to tax day as well. So it's going to be a busy week. What I suggest you do, like we always talk about, just take a little bit slow right now for this market here, because we are still. Let's take a look at the S&P 500 here for a minute. We are still well below the 200-day moving average, and now we have the 20-day moving average crossing underneath the 200 currently right now. So that's about 57.50. So this is an area that we need to pay attention to. This is an area that we fell sharply from about 3 weeks ago, 2.5 weeks ago. So if we can make a nice run above there, get above a couple of those candles, those wicks from last week, Wednesday and Thursday, and that would be about 57.20. Get above that area clean, and looks like we may be opening up about above there this morning. To stay above there, and we start making a move upwards toward that 200-day moving average, then it's decision time, and we can figure out what to do. But I think at least from here, there's a good 80 handle move. We already got 69 of them in right now, so we good 80 handle move, 80 or 90 handle move to that 200-day moving average. And then we can kind of figure out what to do from there. But it looks like we're going to get off to a good start this morning, and hopefully we can maximize our profits and take advantage of the current situation. And again, what you want to do is you want to position yourself into names and stocks that have good, strong momentum, right? And you also want to have some protection on. Keep a lot of cash. Protection being in puts. Obviously, if you have puts right now, I have some puts on. They're going to get blasted this morning. And you know what? I don't care. It doesn't matter. It's protection that I needed to have on just in case the markets were going to be soft this morning. I had no idea on Friday night what the futures were going to do Sunday night, or how the market was going to open up this morning. But having that protection in place was an important element for me to be comfortable having the long positions on. And in addition, when the market's open today, when I get going here in a little while, I have that protection on just in case I want to do some more buying. I can always feel comfortable going long and buying calls in the markets when I have some protection on. Right? If I don't have any protection on, it makes me a little nervous, makes me a little worried that I'm getting over my skis. I'm getting a little bit too bullish. I'm looking at enormous amount of opportunities and buying them all without having any protection on. But as long as I have that protection on, I feel much more comfortable in getting along some stuff in this market. So hopefully that's helpful to you. Quick note, I will be in New York this week. I'm leaving tomorrow night. I will be doing some media stuff this week. I will be doing Schwab TV in the afternoon. I should actually be co-hosting Yahoo Finance TV with Maddie Mills from 10 to 11 in the morning. And I will be doing a Yahoo podcast just after that at the New York Stock Exchange. But if you have a chance to watch me on Yahoo Finance TV, please tune in. And then lastly, today, tune in to Jim Cramer's Mad Money show. I will be doing the off the charts today. I'm not sure what time that segment's going to be on. It could be early in the show, it could be later, but anytime between 6 and 7 p.m. Eastern time, 3 to 4 p.m. West Coast time. Watch for that, and shoot a voicemail to 800-743-CNBC, and let them know what you think about that. But watch that and see what I'll be covering on the show. So it's always a lot of fun to do off the charts with Jim. So take a look at that. So have a great day, everyone. Appreciate everyone spending a little bit of time with me. Please send this out to somebody who you think you might be able to use this. And we'll be back on Thursday. I'll be coming back late night Wednesday night, so a little groggy on Thursday morning, but no problem. I'm always happy to be spending a little bit of time and sharing some information with you guys on Thursday morning. So I'll see you guys all back on Thursday. Have a great day, trade well, and I will see you then. Take care. Bye.